Hello everyone, welcome back to our channel. This is Weber Bansal. Today we are going to cover the Safe Harbor rules, which is the amendment for your January 2026 attempt. Usually this topic is not a part of your syllabus because when this particular topic becomes notified by the government, your time limit for the amendments applicability is already reached. So that is why the topic is not applicable till your last attempt. But for the January 2026 attempt, this topic has been notified within the time frame, and that is why it is now become applicable for your attempt. Okay, so that is why we are going to cover the safe harbor rules in a very simplified manner. By this particular one chart, you are going to cover the entire safe harbor rules, and you do not need to worry about the rates and the learning part. How will you understand and learn it? Everything is going to be covered in this particular video itself. You will going to learn it each and everything in this particular lecture. Okay, after that there is a one question, that is question number 19, which is also came on the safe harbor rules in your January 26 attempt of RTP, in where we will complete this particular question as well. And this is with this particular video of 15 to 20 minutes, you are going to complete all your safe harbor rules, question and answers with the concepts. Understood? The whole PDF which I am sharing here will be applicable, will be given to you on our Telegram channel. If you haven't joined it, join it from the description box or the comment section. Both everywhere the link will be available to you. The the Telegram channel handle is CA with Weber Bansal. You can go and you can join our Telegram channel as well directly. Okay, our website is www.weberbansalclasses.com. If you want to purchase any of our courses of the exemption batch or anything, you can go and buy that courses. Okay, now we are moving ahead for the safe harbor rules, which is applicable for your attempt under section number 92 CB. But see, it is going to be applicable for the international transaction. First, let me give you an example. Let me give you a brief what the safe harbor rules are. Okay, see, under the transfer pricing, you have understood and you have read that you have to calculate the transfer price based on the ALP calculations. Understood? Like there are six methods. You have to calculate the ALP and see whether the transaction which is done is on the arm's length price or not. And if it is not, then you have to also check out the tolerance range of 3%. And then it is also not under the ALP after the tolerance range as well. Then there is a primary adjustment, secondary adjustment, everything, additional tax and all, everything you have done. Yes, but the government said that we are not free to find out the ALP of each and every industry. Okay, so we are giving you some industries where we will be giving you the rates, at least show this much of the operating profit or this much of the margin, and we will be happily accept that. We will be happily accept that. We are not going into the method of calculating the ALP in each and every cases, but we are giving you certain industries in where you, if you show that particular operating margin, then it will be satisfied and we will be satisfied, and we are not going to charge you anything above that. Okay, we will be accept that particular transfer price as a ALP, that is a arm's length price. Understood? Now the procedure and the consequences we will see at the later part, but now we are going to see about the first thing, that is a safe harbor for the IT and ITES, that is a IT enabled services. Okay, IT and IT enabled services, and it is also applicable for the software development. It is also for the software development thing. See, software development services, are you giving the software development services, BPO services, or the call center services, or anything related to the software? Anything relating to the software will also come in this particular part, or IT enabled services will also come into this particular part. Now what they are saying, if you are providing your aggregate transaction value, see, if you are doing the aggregate transaction with your associated enterprise, and the aggregate amount of the whole transaction in the whole previous year is up to 100 crore itself, like the aggregate value of the transaction is up to 100 crore, then you have to show at least 17% of the operating profit. Okay, 17%. You can show more than that, yes, you can show that, but it is minimum that 17% you have to show. Okay, and if the aggregate value is exceeding 100 crore but up to 300 crore, then you have to show 18% of the profit margin. If then you have to show what, 18% of the profit margin. Have you understood this particular point? Okay, so if if you are providing a software development or anything related to the software or IT services or the BPO services, call center services, so if your transaction with your AE in the whole previous year is up to 100 crore, then 17% margin you have to show. But if it is from 100 to 300, then you have to add 18, then you have to show the 18% of the profit margin. Understood? Now, if you are providing what KPO, knowledge processing outsourcing, okay, what you are providing the services of knowledge processing outsourcing like analytics services, okay, engineering services, market research services. So we will see the aggregate value of your transaction should be what, 300 crore less. Up to 300 crore it will be done. Yes, it will be done as up to 300 crore. Now, see, if it is a services, if it is a services, so that, so what we are saying that the major cost in the service industry is what, the employee cost. The major cost in the service industry is the employee cost. That is why we have made a base of employee cost. Understood? Yes. Now the government is saying that if the employee cost is less than 40%, then you have to show what, 18% as a profit margin. See, earlier we have left on 18%. Now we will start with 18%. Okay, earlier we have left with 300 up to 300 crore na, so that is why the transaction should be up to 300 crore itself. It is just to learn. Okay, if you can learn, this is the best method. Okay, so for the KPO services, up to 300 crore of the international transaction is done. Yes. Okay, the employee cost is less than 40%, then 18%, and then go above by increasing the 3%, by increasing the 3%. See, if your employee cost is up to from 40% to 60%, then it is going to be what, 21%, that is plus 3%. And if the employee cost is greater than 60%, then it is going to be plus 3%, that is a 24%. Understood or not? Tell me this. Understood or not? So the KPO services is also done. So the knowledge processing outsourcing, it is a service unit. So service unit, the basic cost should be what, the measurement should be based on the employee cost. If the employee cost is less than 40%, then the 18% of the tax applicable margin will be applicable. Okay, then if the employee cost is 40 to 60%, then 21% will be applicable. And if the employee cost is greater than 60%, then the 24% of the profit margin will be applicable. But now see, if you are providing a contract R&D services, R&D services is what, the research and development services. If you are providing the research and development services like a software development you are doing, or the generic drugs, you are doing the research and development for the software development. Okay, generic drugs development. Okay, and again the transaction value is less than or up to, is up to 300 crore. So see, we left on 24%, we did here with 24%. Understood or not? So whether you have completed this or not, we have not completed this as of now, but whether you have completed this, these all are interlinked. See, it, you have left 18% here, the starting is with 18% plus 3 plus 3. Okay, if you left here for 24%, this is the same thing, that is a 24% for the contract R&D services. Understood? Now coming to the auto components. See, there are two parts, in the auto component. Are you providing the core services, or you are providing a non-core services? What are the core and the non-core services? See, for the auto component, what is the core part? That is a engine, that is a braking system. Okay, now all these are the core part, without which the auto component, the car is not workable. You cannot use the car without these things. Okay, without the engine, without the braking system, you can't use that. That is why it is a core services. But what are the non-core services? Like making of a car seat cover. Okay, all these are what, non-core services. Okay, if you are a manufacturer, of a non-core services, then you have to show your operating profit margin, which is 8.5%. And if you have a core service, if you are providing the core manufacturing services, then 12% should be your operating margin. Okay na? So the research and development you have done for 24%, and for the manufacturing part, see, if it is a manufacturing of auto components, then for the core components, 12% of the operating margin should be shown, and for the non-core it is 8.5%. Understood clearly? Now coming to the most important part, that is the intra-group loans. For intra-group loans, see, this particular intra-group loan is not applicable to those companies whose business is providing the loans, like the financial institutions or banks. Okay, or whose business is providing granting loans or advances. So on these entities, it is not going to be applicable. These safe harbor rules are not going to be applicable. Okay, and rest of the entities, rupees, the safe harbor rules is going to be applicable. Now, there can be two kind of things, that your loan is denominated in INR, that is in rupees, or your loan is denominated in a foreign currency, suppose in dollar. Understood or not? Clearly tell me this. Yes, understood. Now see, if your loan is denominated in INR, so first the base you have to take what, 1 year's SBI lending rate as on the 1st April of the previous year. In the 1st April of the previous year, you have to take the 1 year's SBI lending rate and see what is the credit rating of our agency. If our credit rating is from AAA to A, then 1.75% should be added on the SBI lending rate. Okay, what is the SBI lending rate plus 1.75%? This should be our margin that we have to show. But if our rating reduces from AAA to A to triple B minus to triple B plus, then 1.5% should be added in this, that is 3.25%. If our credit rating again deteriorates, okay, from triple B minus to triple B plus to BB to B, then again 1.5% added. Okay, again 1.5% added, then it comes to what, 4.75%, and again it reduces to 6 to C to D, again 1.5% you need to add, and it comes to what, 6.25%. Whether do you understood and learn all these 4 points? Tell me this, whether you have understood and learned all these 4 points, starting from 1.75% plus 1.5% plus 1.5% plus 1.5%. And see, if the credit rating is not available for the entity, but the loan we have given to all our entities, not one entity, but all our entities in aggregate is in INR is up to 100 crore. We have not given the loan exceeding 100 crore rupees and our credit rating is not available, then the base rate plus 4.25% is to be done. Understood? Now, coming to the foreign currency loan. Coming to the foreign currency loan. So, our reference rate should be what? 30th September rate. Okay, 30th September rate should be our reference rate. On that, see, the same credit ratings are available here as well. So you do not need to learn again. The same credit ratings are there. Yes. Now, here what we have to see, earlier what we are saying, earlier there was no transaction limit, earlier there was no transaction limit in the INR, but there are transaction limit in the foreign currency, like your loan is what, up to 200 crore in rupees. Array, if you convert it, then it should be rupees 250 crore rupees. If you have given the loan up to 250 crore rupees, then starting with again 1.5%, okay, then 3%, 4%, and then 4%. Understood? This is clear to you? Yes. But now, if your loan exceeded 250 crore, then there is a higher risk. Then there is a higher risk. But if your credit ratings are good, then we'll charge the same amount. Then we'll charge the same amount. But your credit rating are not good, then we need to take some cushion. That we need to say, take some cushion. That is what, from 4% we'll take to 4.5%. From 4% we'll take to what, 6% in this particular case. But see, here what we, again 1.5%, 1.5%, 1.5% we are at. Okay, but see, if the loan is greater than 250 crore and your credit rating is not available, then also 6% rate will be applicable in any of the case. If your credit rating is not available, 6% is the rate. But if your loan amount is less than 250 crore or equal to 250 crore, which is up to 250 crore, okay, and your credit rating is not available, there is no such provision here. That means if the credit rating is not available and the loan given is up to 250 crore rupees, then the safe harbor rules are not applicable. Array, understood what I have said? Clear? Yes. Now, moving ahead to the last two parts. What are these parts? They are saying that if you have provided a corporate guarantee to a non-resident wholly owned subsidiary, if you have provided the corporate guarantee, see, corporate guarantee should be for the borrowings, whether it is a short-term or the long-term borrowings. If we are giving a corporate guarantee for the borrowings, whether short-term or long-term, then it is okay for to the NR wholly owned subsidiary. Okay, but if we are giving the NR wholly owned subsidiary corporate guarantees in terms of what, letter of credit, Okay, performance guarantees, these are not covered. Only what covered is borrowings in terms of short term or long term borrowings. That is only covered to the NR wholly owned subsidiary. Okay, then the profit margin should be at least 1% per annum. And okay, and last part is what are support services. If we are providing a low value adding services, see the amount is what low. They are saying the low value added, so the amount should be low. That is means up to 10 crore rupees amount should be low, and the markup should be up to 5%. We are not going to be at least, till here what we are saying, at least, but here they are what low value adding now, so that is why we are saying up to 5%. Maximum cap is given is up to 5%. Okay, should be equal to up to 5%. Clear? Is this point clear? Margins are given as OP by OC. Everything is covered. See whether you are able to recall each and everything. See, it is very easy. If you go by this visual chart, everything is going to be very easy for you. Understood clearly? Now shall I move forward to the procedure and consequences? Yes. See, for the procedures and the consequences, if you want to opt for the safe harbor rules, now you have to file a form 3CEFA up to the filing of return of income, that is 139(1). The due date is applicable. You have to file the form 3CEFA up to 3 years. See, up to the maximum of 3 years you can opt for the safe harbor rules. If you want that I'll opt for the each year, you can opt it. But if you want that I want to opt for consolidated of 3 years, like I want to file a form 3CEFA for 3 years, okay, simultaneously I don't want to file it again and again for the 3 years. I want to file it for the 3 years as of now itself. So you can file it for the 3 years, but you can file for more than 3 years, no. Okay, now see, the no range concept is applicable. There is a tolerance range of 3%. Now it is not going to be applicable in this particular case. And if your AE is established in the not notified jurisdictional area or the no tax zone, or in a country where the lower tax rate is applicable. What is the lower tax rate? Where the highest tax is less than 15%. If there is a country whose highest tax rate is less than 15, then we will assume it is a lower tax country. So if your AE is situated in a lower tax country or the no tax country or a notified jurisdictional area, so the safe harbor rules are not applicable to them, and the no map access will not be given to them. Mutual agreement procedure will not be applicable if you are opting for the safe harbor rules. Now, whether the AO can refer the case to the TPO, yes, they can refer the case to the TPO, but within 2 months from the end of the month in which they receive the form 3CEFA. Whenever they receive the form 3CEFA, they can refer to the TPO within 2 months from the end of the month. Now, if the TPO pass the order, but you are not satisfied with that order, then you can go to the Commissioner of Income Tax. Okay, where you can go, Commissioner of Income Tax, within 15 days of the TPO order, you have to go. Okay, if you go within 15 days of the TPO order, then the CIT will pass the order within 2 months from the end of the month in which the order objection is received. Whenever the objection is received within 15 days, they'll give you the order within 2 months from the end of the month in which the application is received to them. Understood? This covers your whole safe harbor rules. Nothing extra you have to do. Everything is covered here itself. This is a chart where you'll get it from our Telegram channel. You can join it. The link is given in the description box or in the comment section as well, and you can search it, CA with web, you will get it. Okay, now coming to the question number 19. What does it say? See, we have to examine the following transaction and discuss whether the transfer price declared by the following assessee who have exercised a valid option of application of safe harbor rules can be accepted by the income tax authorities or not. Okay, now see, this is our AE. Okay, this is our assessee. We are assessee. What we have done, we have entered into an international transaction with whom provision of system support services to Blue Orbit Systems Inc, which hold 30% voting power in Tech Mitra Solution Limited. Okay, holding 30% of the voting power, that means greater than 26%. It means Tech Mitra and Blue Orbit are what? Associated enterprises. Understood? And providing what? System support services means IT and IT enabled services mein, there is a software development services. Understanding it? It is a software development services, and the amount is C, less than 100 crore rupees. It is less than 100 crore rupees. Yes, so we have to show what? 17% of the operating profit. we have to show this margin of 17%, the same range. Array, you are recalling this range, 17%. Okay. Now see what they are showing. What they are showing, it is operating expenses, that is OC. It is the operating profit margin, that is OP. So 8 by 50 into 100. What they are showing? 8 by 50 into 100, that is what, 16%, but we have to show at least 17%. They are only showing what, 16%. That means the safe harbor is not applicable in this particular case. Okay, please do not add sir 3%, please we will add, it will go to 19% and we have to show 17%. So the tolerance range is not applicable in this particular case. Now we have already seen. Okay, now coming to the next part. Next Era Systems India Limited, an Indian company. It's providing what? Data processing services with the use of IT enabled services. Array, to its foreign subsidiary. If it is a subsidiary, that means it is holding for more than 51% of the voting power. So it is greater than 26% itself. So it is a AE. Yes, again see the transaction price is 100 to 300 crore, so that means 18% it has to show, at least 18% it has to show. Now what they are showing, do it, what they are showing, 45 divided 45 divided by 225 and 200, they are showing what, 20%. They have to show at least 18%, they are showing 20%. Whether the safe harbor is acceptable, yes it is acceptable. Now Pragati company partnership firm, it is a partnership firm, and see interest is 12%, which is greater than 10%, so it is also a AE, and providing what, contract R&D, that means 24% of the 24% should be the margin, 24% should be the margin, and the transaction value is up to 300 crore. Understanding, recalling everything. So 50 divided by 250 into 100, see what is the rate. Sorry, 50 divided by 250, no? Okay, it is going to be 20%, but we have to show what, 24%. They are only showing what, 20%. Again the safe harbors cannot be accepted. These are the three cases. In all three cases it is assumed that the Indian entity which provide the services assume insignificant risk. It may be assumed that the foreign entities referred to are the non-resident in India. Okay, they are done. Okay, would your answer change if any of the case mentioned above the foreign entity is located in a notified jurisdictional area? If it is located in a notified jurisdictional area, then the safe harbor rule shall not be applicable. Array, understood or not? Clear? Can we see the answer? Yes. Point number 19. Question number 19. Sorry. Yes. See. Blue Orbit. Okay. Holding 30%. It is greater than 26%. Okay, providing, it is a software development services, we have already seen this. Okay, not exceeding 100 crore, so 17% should be this, but they are only showing 16%. Okay, so as per rule 10D, it is not binding on to accept the transfer price. It is not binding because the safe harbor rule is not applicable to them. Okay, now second is what a IT enabled services, ITES. See, the transaction value does not exceed 300 crore. See, 20% is this, but we have to show at least 18%. Yes, so in this percent it shall accept the transfer price. And third percent, see, it is not, should not be less than 10%, then it will become AE, and it is already 12%, so it is a AE. Understood? Clear? So and if it is a contract services, so they have to show what, 24% margin, and there is only 20%, so it is not binding to accept. Now safe harbor rules shall not apply if the eligible transaction entered into this is what, in NJA. So if it is in NJA, so safe harbor rules are not applicable. Everything we have done. See, everything we have done. This is where we completed the whole topic of safe harbor rules. This particular PDF is available on our channel. You can directly download it from there. Okay. This is all for the day. If you are here till here and completed the safe harbor rule, kindly comment on the comment section how do you find this particular session. Okay, we'll be grateful to listen from you. Okay, if you want any other video, please comment down and we shall be providing you the video of those particular topics as well. Take care and all the best for the January exams.